Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Monday, September 23rd. Right across the board, talks on the fiscal cliff, and we also had a Fed governor speaking, stating that we may be tapering for October versus the end of the year, and that send the markets down. And pretty much then when you had the quadruple witching on top of that, that added fuel to the fire. Down 185 in the Dow, NASDAQ down 14, S&P down 12.5, Russell down 2.5. But the selling was definitely orderly. It was anything fearful about it, to be worried about a big market crash. But we did have a red day, and we took back about good 50% of the move from Wednesday's reaction to what Ben Bernanke had stated. No QE, meaning that we're not going to taper, and that's when the markets really rallied pretty hard. So as you can see, we have a lot of headline risk, and you have to be really cautious in your trading. And when you take a step back and you look at things, you say, okay, what's the overall picture? I do think, I've been stating that risk is still to the downside for the next several weeks. We are in seasonal weakness time of the year, and the next, I think, 2 to 3 weeks, we could see at least a decent pullback. Not saying it's going to be any type of crash, but then that would be a good spot to start adding to your long positions if you're looking for long exposure. Not here, not at this area. Obviously, if you're day trading, it wouldn't matter either way, but you still want to look for what the trend is. One day doesn't make a trend, guys, so remember, everything in the weekly charts are still pointing for higher prices by the end of the year, and I'm going to show that to you in the charts as we move along. Quick, I want to just show you we are unwinding in our McClellan oscillator. So we were up here about the 90th percentile, and then we're back down into the 33%. Anything right in this area here is all noise. So I like to see the McClellan sometimes break below or above, and as you can see here, we touched the Bollinger Band and we came right off. And I mentioned that on Thursday morning video. Be careful look for a pullback here, and sure enough, we did get that on Friday. Now, take a look at the stocks above the 50-day moving average. We did get a little break higher. We are still on a buy signal. We did break that little slanted downtrend line, but we're still, again, in a buy signal. We just pulled back a little bit, kissing that 8 MA. So just keep an eye on it, see if this thing starts to roll over again. This is a logical spot for the market to actually pull back again. And what would I expect? I would expect a little bit of a pullback this week. Really Monday, Tuesday is going to give us the idea of which way this market's going to be headed. Are we going to pull back for the next couple of weeks, or are we just going to resume the uptrend? I think the markets are tired. I think the markets need a little bit of a rest, and a pullback is definitely going to be warranted here, especially at these prices. So let's take a look. We'll see what happens here today for tomorrow, or tomorrow into Wednesday, and see if we get a sell signal in the SPX 50. Now, stocks above the 200, not quite there, but again, still on a buy signal. We broke out. Now just looking to touch this area here. So we'll see. Again, guys, this is going to be close to see if we do in fact start the pullback. Now, mind you, I will say we are up about 2.5 in the mini electronic session. We had some good China PMI come out in the late Sunday night. But again, cautious trading. I'm looking at it. I'm looking at the European markets. I don't see anything really exciting here, so we could easily fade going into the opening for today. All right, let's take a look at the New York Stock Exchange Summation Index. This is the weekly chart, right? I like to show this every Monday. This is still on a buy signal, okay? To be on a sell signal, we need to really take back this candle and then some. So we wouldn't get on a sell signal till next week sometime, if that does even happen. Okay, so we're not even overboard here on the RSI 5 and the CCI. So this is still on a buy signal. And same thing with the NASI Summation Index. This is also still on a buy signal. So nothing really wrong here. Okay, now let's take a look at the VIX. VIX here, we did get a little bit of a sell-off in the VIX early on, and then VIX popped up a little bit. But as you can see here, it seems to me that I don't see that there's a lot of fear and or greed right now with the last couple of days of trading. It's just kind of holding its own here. I would have thought that the VIX would have popped up a little bit more on that sell-off. But again, the sell-off was very, very orderly on Friday. And there was higher than expected volume, but that was because of quadruple witching. You take that away, and I think volume was very muted on Friday. So I always like to look at what happens when markets do sell off, because you get a lot of good information by watching and monitoring what price is doing. Here's the dollar. Now the dollar, this could be a game changer, right? So if they are going to taper in October, this month coming, then the dollar will get some renewed bids into the market here, and we could see the dollar really explode. I do like the dollar long. I still like it long, maybe long. Now again, with the news of the tapering, if Ben Bernanke does hold off, then obviously this dollar trade is not going to work, and we're not going to get our buy trigger in the dollar. So keep an eye on the dollar, though. That's going to be a really big catalyst here. Okay, let's go into our chart segment, and as you can see, obviously gold will be affected, and commodities as well. And we did take back 50% of this. Now, I had mentioned, and I've stated many times, get a lot of emails, phone calls, oh, what about gold, what about gold? I still like it short. I will not be buying gold. The only way I buy gold, if gold actually would break down to around 1,000 to 1150, then I would start building a long position in gold. If not, I'm looking at GLD right up in here, 138, 139, 140 area, if gold were to pop. And I don't see that happen at the moment, but you can even take a trade right around the 138 area here, knowing that your stop's going to be right up in here. Easy to manage. Right now, I think you're in no man's land. If you do take this area out, this pivotal low of 125, you could probably get short, okay, with maybe $1 or 2 stops above, depending on your trading plan, with the first target of this area here at 114. Okay, so right now we're really in no man's land here. I wouldn't be looking at gold long or short here. I'm a better short seller up here or a buyer way down below. Now USO is giving us a little bit of a pullback that we're looking for. 136.5, 137 is going to be my first area where I'll be looking to nibble in USO. Small nibble with the stops just below $36 here. But right now, crude oil, same thing, really in no man's land. I wouldn't really be looking to trade USO at the moment. And here's the weekly chart of the S&P. As you can see, we're in an uptrend channel. Absolutely no problems. We're looking really well here. So we're still chugging along, making higher highs and higher lows. We have the bullish symmetry. There's really nothing wrong in the longer term picture. Again, daily chart, yes, you could see a little bit of lower prices, but again, that's healthy. Probably get down to the 1648 area, 1640-ish, and then probably bounce. And that would be the lower end of this uptrend channel. Here is the S&P daily chart, as you can see. And again, 1648, 1650 would come in right around here. Logical area. This is good horizontal support, which would be the 1650-ish area here. Matter of fact, I'm going to just add that right up in here. So right up in here would be a logical area for a pullback. Again, the 50 and the 20 is just above that. So anywhere in here would be our first target area if you follow in the cash. Here is the monthly chart of the spiders. Again, the month has not finished. We still have 6 trading days left. But again, still holding up relatively well up against the upper trend line. So can we pull back? Sure, we absolutely can. But if we do break out, you know, we're on uncharted territories here, and we could break out to see, again, new highs. I think the market pulls back first before it goes any higher. You know, you could get a little bit of a whipsaw, but I still think that. Weekly chart as well, as you can see, same type style of the cash, higher highs, higher lows. We did hit the upper end of the range, but again, we could come back to that 166, 165.50 area would be still okay and still be in an uptrend. So keep that in mind. You might want to write that down. I like it still here, right up in here, 166 area. I'll just put that trend line area here. And that's going to be the first target area will be here. Second target will be the 166.50. That would be the bigger downside target in the spiders. Here is the 30-minute. As you can see, we had a big pinch. And I said, guys, watch for a move. And sure enough, it ended up being to the downside versus up higher. So now Bollinger Band's going to have to contract again, and we're going to have to see some sideways consolidation, which usually after a big move, you might see a slight up day today to an unchanged type of day. So I think today will be relatively quiet, again, unless there's any type of news event that comes out of the markets. Here's the 15-minute chart. As you can see, sideways consolidation, up, up, up. And then we opened, and we just literally just grinded lower all day. There was absolutely no fearful selling at all. Just literally grinded lower and closed at the low of the day. No buyers at all stepping up to the plate. Here's the Diamonds Daily. again, hit the top of the trend line, and we came in. So this area here, which is going to coincide nicely with the 50-day moving average, is an area of what you want to be looking for if you're following the Dow Jones. And these are the diamonds, which is the ETF for the Dow. IWM, same thing. Now, IWM's held up really, really well. We did close at the low from the previous day, but still holding in at the upper end of the range here. So that's actually a very good sign if you are a bull thinking that the markets are indeed going to go higher. We are a little bit elevated here on MACD and stochastic. So again, a needed rest is good for the markets. If it could just pull in a little bit, even come down to the 103.50 area, then I think that the markets here are poised for our year-end rally, and a strong year-end rally too. Here is the transportation sector, and again, we are still in an uptrend. If you can see this little area, we are in an uptrend, and we're still making higher highs and higher lows. So I still like the market long. However, again, a pullback is needed here. So nothing wrong with a pullback to this 117 area. Transport's our leader. This is definitely our leader here. So keep an eye on this. This sector, this index, excuse me, to see if this starts to break down. If this starts to break down, then I do think you're going to see some continued downside pressure here. Goldman Sachs here held up really, really well beside yesterday's, Friday's move lower. So let's just keep an eye on what Goldman's doing. And, of course, the XLF really took it on the chin. Most of the bank sector actually got got hammered pretty bad on Friday. But again, still relatively holding its uptrend line. If you can draw the XLF, you could still take this and go like this, and just barely, but just close right at the uptrend line. So again, we still have bullish symmetry, but we're starting to fade a little bit. And here's Apple. Now Apple is holding at 466. Going to need to hold, otherwise we test this area at 448. If we break the 448, then of course we can beat any one of these little pivotal lows over here. So keep an eye on it. Here's a gap area of support, which would need to be probably filled, and I think that would be the target area. Would be the 435 to the 419ish area. Anywhere in here we get a gap filled, then I would be looking to put on some long positions for a longer term Santa Claus rally. But let's see what happens. Again, we're a little bit way away. We don't even know if that's even going to happen. Let's see where we go in the next couple of days and see where Apple starts to trend. And lastly is the Qs. Qs, again, big cap tech did really well, holding it nicely, but again, we had that sell-off. Everything sold off on Friday. And again, guys, partly due to that quadruple witching. So let's see what happens this week. I think today we probably will get a slow grind up to an unchanged type of day, a very boring day. But I do think that coming into this week, we should see some continued weakness. Now, again, remember, news trumps the chart, so that could happen. So we want to be on our toes. We don't want to take a lot of positions on overnight, other than with a catalyst. And let's just be ready for it. Again, we have non-farm payrolls that are coming out next week, right? The first Friday of every month. So that's going to really be a big mover again. It will be interesting to see how this market starts to develop. I do see seasonal weakness, though. We are in that seasonal time of weakness for the next 2 to 3 weeks. So just keep that in mind as well. Have a great day. Be safe out there. Use your stops, and we'll speak to you tomorrow. Take care.